Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, are you someone who is tired of taxes? Did you know this week we celebrated Tax Freedom Day this past week? This is where we as Americans go to work and actually keep money for ourselves pretty much from May forward, which pretty much takes through the month of April to pay for all the taxes that come out of our hard work. Now, I want to teach you how to remove yourself from the tax system or strongly mitigate, if not entirely eliminate, your taxes. So if you're someone sick and tired of taxes, wanting to learn how to lower your taxes, or you're unsure of the tax risk road that you're on, like many of you have reached out, especially over this last, I'd say couple years now that the Biden administration has taken over. I shared last week that we're $430 billion higher, right, of deficit spending at the same time this year as we were last year, right? 430 billion, folks. 90 billion of that is a result of higher interest rates posed, unfortunately, brought onto us by the Biden administration, right, with all this, as we call it, drunken sailor spending, and proposing in this new fiscal bill that comes out this fall, $4.7 trillion of additional taxes to be collected over the next 10 years, adding to the fact in the last couple of weeks, the federal government is now in full swing of the $80 billion from the Inflation Reduction Act. You can't make this stuff up, folks, passed last August by the Biden administration to raise revenue for what they call the tax gap. So a little over half the $80 billion, $45.6 billion to be exact, is going into revenue efforts. And I shared this week that Ted Cruz on my Hidden Wealth radio program is just in absolute mass frustration that one of the bills is to go after collecting more taxes from tips. So here we have people that are working very hard. And remember, the Biden BS was that there would be no new taxes posed on anyone that makes less than $400,000 a year. Well, folks, that was another Biden blunder, because if we're going after tips from the people that work their keisters off, we're obviously looking for taxes anywhere we can get it. Now, here's the question. Not only have I asked you, are you someone who's tired of taxes, but do you think that the Biden administration isn't licking their chops as it relates to the trillions of dollars trapped in tax-deferred IRAs and 401ks? So let me teach you this Tuesday what you can do to remove yourself from being tired of taxes and learn how to mitigate and eliminate unnecessary taxes. Go to retirementprotected.com. That's retirementprotected.com, and learn what, as I thought about it this week, I think about Al from the great state of Florida. I think about Randy from the great state of Colorado, and I think about Doug from the great state of Illinois. And all of them celebrated their own tax freedom, right? So instead of celebrating a tax freedom day, how about celebrating a tax freedom life, becoming a low tax or a no tax retiree? Let me give you an example of what they learned at retirementprotected.com. Number one, they learned how to have up to typically a 75 to 80% first year deduction. So this is a 100% tax deduction, but generally recognizes about 75% of it in the first year. So let me give you an example. Some of these gentlemen are high income earners in their families, all married, and what they're looking to reduce their taxable income, especially knowing that tax rates are going to be going up higher later. But many of you have reached out that have required minimum distributions or will have required minimum distributions, depending on your age. That'll start at 70, already has started at 70 half, 72, 73, or 75. And you want to get out in front of that. Well, using this deduction for those that qualify allows people to use the deduction to offset the tax liability of what they convert to a Roth IRA. Let me give you an example. If you used $100,000 into this vehicle that I'll teach you Tuesday, and it's not just for a tax deduction, it also last year yielded over 15% net cash on cash outside of Wall Street alternatives, folks. And a lot of you have asked for those solutions, which we teach. But on top of that, outside of Wall Street yield of 15%, clients, by using $100,000, created a $75,000 tax deduction and used that to go convert $75,000 of their IRA to Roth IRA. In other words, using strategic tax planning in the code with our tax team to legally offset tax liability by using one section of the code to protect them and save them taxes in another section of the code. Folks, you work hard for your money. Imagine more financial success, less stress, less worry, less taxation, less concerned than of inflation. And I'll also teach you Tuesday how to eliminate market deterioration, because the market is all over the place, folks, and taxes are about to go there too. Protect yourself. RetirementProtected.com, retirementprotected.com.